Hello guys, I hope everyone has had an interesting week so far. My name is Samson Mzera and I'll be taking you through today's market snapshot session. We're going to cover what's going to happen towards the second half of the day. That's ADP and employment. And then you're also going to cover what has happened this week and also what to expect next week. So if you can hear me and my audio is loud and clear, just say hi on the chat. Hello, Steven. Yeah, so you can just say hi on the chat while we start. If you can hear my mic, just say hi on the chats. Jack, Kevin, okay, I think we are good to go. Hey guys. Okay, so we'll start off with a recap of last week's session. So this is my chart. These are charts we drew together here last week on Friday. So we will just go through them and then see what happened, how it transpired, and then see what you're supposed to be expecting next week. So next week, I'm seeing is very packed. Let me just go through this. Yeah, we have quite a number of interesting things next week. Okay. So first things first, we did go through the USD JPY chart. Remember last week we said this gap over here, where it made a void. So when the market drops sharply, usually we call that an imbalance because we assume not all the trades have been filled. So with this liquidity gap here, the market rushed back to that point. And then we also noted that if USD, if the Japanese yen continues to weaken further, it might increase the chances of the Bank of Japan intervening. So we capped our top side. That means we shouldn't expect Japanese yen to go above 150 for long, if at all it goes above 150, because it increases the chances of the Bank of Japan intervening and taking it back down. Okay, having said that, we had the market fill this void. I remember last week you were at this point on Friday, and we did say that of course, the expectation was a stronger dollar, but we are seeing the dollar softening a bit, and we'll discuss about that in today's session. And that means we only ever got to this point where there was a supply zone, barely touched it, and now you seem to be coming back down in what appears to be just a retracement back in that gap. So we will be looking to see if we can get any entries potentially at this zone here. So nothing has changed as far as fundamentals go, but there's one thing we need to note about the Bank of Japan. So let me just change my screen a little bit to this. So the BOJ governor was speaking yesterday, and remember, Japan was one of the last countries to still be in an easing mode when guys were tightening. That means making macroeconomic conditions easy, akin to lowering interest rates and things like that. That makes the Japanese yen more available. Having said that, this is what he was quoted saying, the Bank of Japan governor. I think there's more risk to scaling up on easing too hastily and failing to meet a 2% inflation target. So they're still easing. They're saying it's too fast for us to start scaling back on that. That means that we might still see some upside room for USD JPY. That's all that means. And as much as they're doing the yield curve control thing in Japan, they're still reluctant to tighten conditions, to make macroeconomic conditions tighter. That means we still should anticipate some upside room. That's what you're saying. If you go back to this chart of USD JPY, let me share this. If we go back to this chart of USD JPY, there's potentially some upside room in this move. As far as the retracement goes, we might have a couple of points on this move. So generally, you expect that retracement, once it completes, for us to go back into this area where the market started selling off initially. So in as far as USD JPY goes, those are the things to watch out for. So what could make the retracement stronger? Today's US data, and we're going to talk about that once you move on. So let me just quickly go through what happened again last week. So these are still things we drew last week. The other thing we saw last week was the potential for stocks to come back down. Remember, the Fed is still in a hiking mode. Some markets are pricing that in, some markets have not. Again, we'll look at that. So this was what we had plotted last week, that we expect stocks to come back down. And indeed, what we have at the moment is some of those gains made in the past 1 month, in the last month, being erased. And then if you are interested in what we covered last week, just go to the market snapshot video for that week so that you're able to see. So now we need to know what's the way forward, having seen that we are pairing some of those gains that have been made, and where do we need to target going forward. So we'll still talk about this. So if you're doing US 500 or S&P 500, it applies to UT 100 or NASDAQ. And the other thing you're going to talk about is GU. Remember, we had a very strong expectation about the dollar being strong, and we had said that we expect GU to go down. However, the alternative case was GU coming to fill this liquidity gap, GBP USD, which it did, and then came back into that liquidity void and went higher. So possible explanation for this is, at the moment, the dollar has been softening. Yeah. Remember what I said earlier is not every market has priced in the possibility of the Fed hiking by another 2 hikes. So not every market has priced that. So we look at the yields, bond yields, we'll see stocks, and we'll see the dollar itself. So there's kind of a divergence at the moment, and we'll explain how these ones are supposed to be moving when we expect 2 more hikes from the Fed. So that applies to Euro USD. Yeah. However, if I was trading, I wouldn't want to chase these pairs higher without having more information. I wouldn't want to continue being in an uptrend without having more information, because the likely scenario today is we are still, the market is still anticipating a stronger dollar. And once that is priced in, then we'd see most of these trends changing. That's GBP USD and Euro USD. Yeah. So before we get too much into this, let's go now to today's analysis in terms of fundamentals, and then we tie it back to the charts, and then we see what's the plan for the day. Okay. So there's this PDF from ING that I've been going through, so you can go through it together. And at the very top, it's saying treasuries are hitting key levels on big US data surprises. So number one, you do know that US has been showing very strong numbers of late. That means it's giving the Fed bigger room to play with in terms of increasing rates. Yeah. But the dollar is not finding real support. Yeah. So the dollar has been softening despite the fact that we do expect more hikes to come. That means the dollar may be mirroring some lingering reluctance to align to the dot plots. So the dot plots, again, you expect higher rate hikes, but that's not what the dollar is doing, and that's where the question marks are coming from. But market conditions point to a stronger greenback. Yeah. So despite the fact that the market is still expecting a stronger greenback because of the fact that we expect higher rates. And so far, what you can see is yields have been pricing in as higher rates. The stock market, as you can see, has dropped. That means it's pricing in higher rates. It's only that the dollar hasn't weakened. So we'll have a look at the yields. Let me see which chart. This is the XY. This is the XY. So let's look at, for example, the 1-year treasury yield. So usually, bond yields rise to reflect what the interest rate is supposed to be. So if I see, for example, the 1-year yield going to 5.48%, then it means roughly the market is expecting that that's where interest rates are going to be hovering at. Because if you invest in a 1-year securities US Treasury bond, then it should give you the same as what you will get from the interest rates in the US. So as you can see, the market is already pricing in. That means yields have risen. So the 1 year has risen to 5.4%. Remember where the current interest rate is. If you look at the 2 year also, it's doing the same thing. It's pricing in higher rates, although not as aggressively as the, yeah. So that's another thing to note. So if bonds are pricing in, we've seen that stocks are pricing in. So let me go back to my MT5. We've seen that stocks are pricing in. That means stocks are beginning to drop because of that expectation. Then now the question is, why isn't the dollar following suit? So why isn't the dollar being strong? And that's the whole thesis of finding the theme going next week. That is, I'm expecting a stronger dollar, or we're expecting a stronger dollar. Two of the markets have already priced it. It's only that the currencies market hasn't priced it. So the bond markets has already priced in a stronger dollar. Sorry, as higher interest rates. The stock market is pricing in higher interest rates. The only one that's left is the currencies market that's not pricing in that high interest rate. And that's what you need to watch out for going to next week and all your plays for next week. Now, if you look, for example, at Euro USD, if I'm expecting a stronger dollar, what would my play be? I'd want to see us breaking this low over here, this support, and a confirmation will be a retest over here. And if the market fails to go back up, then it's a good area to start looking for sells. But if the current theme continues and the dollar defies fundamentals, then we should see us going back up to this level over here. That's the game plan for Euro USD. And you can translate this to anything that's paired against the dollar. Yeah, you'll be looking for a stronger dollar. That means if the dollar is on the right-hand side, then that means you're looking for sells, or buys if the dollar is on the left-hand side. For example, USD JPY, then here I'll be looking for what are the potential areas for me to get in as a buyer. But you still have to do your own research. You still have to get more information and final confirmation before you make that decision to buy. In this case, of USD JPY. Okay, let's move on to other markets or other countries apart from the US. Okay, so this pretty much sums up what is happening with the whole US thing at the moment. So if we go to, for example, Euro, for example, even analysts are expecting the Euro not to go any higher than it has because of the prospect of a stronger dollar. So that's one thing to keep in mind with that. And then the other event for the day, we have the Canadian jobs data coming in. So if you look at USD CAD, so let's go back to USD CAD. I hope everyone is following. If you look at USD CAD, so usually fundamentals don't just cause the market to move at the moment. Usually markets can move prior because of expectations. And if you look at USD CAD, we've been seeing that we've had a bit of pricing in higher rates from the Bank of Canada. So you've had this push here. You've had this huge push over here. So let me just go back to this and confirm something. Yeah. So we've had this push here. If you go back to the calendar and you try and gauge what was causing that push, you can see that. So let me go back to this. You can see that in terms of employment, the market is expecting stronger figures here and here, given that last time they were relatively weak. So that means a stronger Canadian dollar. So usually the market likes to run off of expectations, and that means it will move in a way that the forecast is what is happening, unless otherwise. That means if the actual doesn't come in as the forecast, that's when you will find that there's a surprise in the market. But in the meantime, the market seemed to be pricing in higher rates. So if they go back to this chart, we've had this downtrend for a reason, and that was the market pricing in higher rates. But at the moment, we are waiting to see how that data will come out. Yeah. We're waiting to see how that data for Canadian employment figures will come out. And if indeed it comes out maybe even stronger, then we should expect us, in fact, this is a very nice setup. We should expect us to come back to this area of demand over here, or an order block, or whatever you want to call this over here. Yeah. US and Canada, then it might be a very tricky play. So that's something to watch out for, because it's happening in a few hours. Okay, so that's as far as USD CAD is concerned. So can start receiving questions while we wind up the rest of the charts that I'm looking at. We'll go back to US 500. Again, this case, our play was still the expectation. So I'll just adjust this from what we did last week. It didn't happen as fast as we expected. We had this section over here that we kind of rested for a while before going lower. Follow is asking, hello Sam, after the strong ADP print analysis on Bluebox suggested that NFP came out, Fed may hike. Okay, so there is a difference between Fed may hike, BOE to go to 7, ECB to follow suit. Okay, so there's a difference between ADP print and the non-farm print. ADP is a private institution, yeah, that does the collection of data. So non-farm is going to confirm. So sometimes you have ADP saying one thing, and then non-farm comes and it says another thing. That happens quite a number of times. So it's good to still have some caution when it comes to today's reading. Just because ADP came in high, the possibility or the likelihood of non-farm coming in high also is very high, but it's not always the case. Having said that, we've seen a lot of, so let me even talk about that with the gold chart. Yeah. So this is also something we looked at last week. So we've seen a lot of strong data from the US, and that already gives the Fed enough room to raise hikes, to raise rates. So we don't even need to see a very strong non-farm figure today for us to know that there is a possibility of at least another hike. Yeah. So that's why the whole strong dollar thesis is coming in. And the conundrum is it's only the currencies market that isn't pricing in 2 hikes, because you've seen yields have increased, treasury yields have increased. We've seen the stock market declining. So those markets are already pricing in hikes, but the dollar is what is kind of reluctant. And having said that, maybe it might start gaining slowly over time towards the end of this week and next week. So that's the play. So when you look at the ECB, for example, and the Bank of England, it's really now a parity play. A parity play is who is likely going to keep rates higher for longer. And at the moment, the market is still assessing that okay, so these guys are going to raise interest rates higher. Number one, are they able to do that? Because the EU and the European economy and the UK economy aren't as resilient at the moment as the US economy. So that's one thing you need to watch out for, because we've seen that the US has strong economic data. That means they can to be more aggressive. But can the UK and Europe be as aggressive, considering their data hasn't been as strong as what we've seen coming out of the US section, that is. And the other question is, if this is true, how will the XY strengthen, bearing the interest rate? Yeah, so that's the thing. The initial play, and actually let me just zoom out with Euro USD because it's a mirror of the XY. So if you want to know how the XY is moving, just invert Euro USD. So if you look at USD, there was a time that we've had this upwards trajectory, this upwards trend. Yeah, and that's basically the market saying we expect Europe to have rates higher for longer than the US. However, we still need economic data to back that. We can't just assume they have the leeway to do that. And that's where the issue comes in. And probably that also explains why the dollar is refusing to strengthen at the moment. I think that's a very good point, Apollo. that might explain why the dollar is refusing to strengthen at the moment. Maybe it's being resisted against the euro and the pound. And if that's the case, we still need to see it coming past this point for us to be certain that we are going high. But at the moment, the dollar hasn't priced in a stronger, higher interest rates, and that's a big question mark at the moment, because at least it needs to be in line before we see some weakness from there. Okay, so if there are no more questions, I think that's what we have for the day. Let me just recap what we've done. We've talked about USD JPY. We've seen that it's coming back down, and we might want to see a pullback at this section. Sorry guys, there's some background noise. Yeah, so if the dollar strength thing is going to go on well, then we might see that happening. Alternatively, even if we don't get to this point and the numbers come in high, I mean, the market is already expecting 2 hikes. A higher non-farm might not change that too much, or even a lower non-farm. So we just need to know it's coming in line with expectations. Unless it comes in really low, that's when the market might have a different opinion about where the dollar needs to go. But at the moment, if the figures come in within expectations or slightly higher, that's going to be positive for the dollar. So we've recapped with USD JPY. We've seen what's happening on indices for US 500, UT 100, which is the same thing. Don't really think I need to go through this if you already have this. Yeah, you can just pause and rewind the video to view how to set yourself up with this. And then talked about the pound. Again, this was yesterday's figures. You see the market, it whipsawed. Yeah, that means yes, the numbers came in strong. We had a slight strength in the dollar, but we are literally back to where we were yesterday, because the main for today, which is a non-farm. And then Euro USD, same place. So here, if you can see a triangle over here, a triangle formation, you can also use that for your analysis. And then for gold, again, there is no country against gold. I mean, it's not a country. So this one is an easier play for dollar strength than you pairing it with another currency. So this is something you'd also want to look at. And then oil. So talk about oil. I've not really had a chance to go through those minutes. I'm yet to go through them, and then you can review them following week in details, because I need to understand the fundamentals behind it and how that's affecting the charts. So we can do that in the next session. Having said that, but this is what we had last week, literally. So we've not really changed the charts we are in this triangle that seems to be reducing momentum. That means sellers are reducing their momentum, buyers are reducing momentum. So we might need to see where this breaks, but let's see what is going to back that. So I'll go through the minutes and then come back and review this. And then we've also talked about USD CAD. The tricky part about this, if we didn't have US news coming out and only Canadian news coming out, then this will have been a very straightforward play, in my opinion, because you're looking at something like this. So you can always just pause the video and then just go through this analysis slowly later. But since we have both employment from Canada and employment from US coming in, it will be a bit tricky to trade this. However, if things come in line, that means if, for example, non-farm comes in weaker, then this is I don't want to say obvious, but it's a very interesting play to look for sell setups if you are going to trade USD CAD. Alternatively, take note that we still have this imbalance way up here. Yeah, so that's something to watch out for. Remember how the market treats imbalances. For example, in this case, this imbalance, we had the market filling that up. Okay, so having said that, thank you for GBP USD. Yeah, so I think you can rewind the video and check that. Let me just Okay, so you're expecting dollar strength across the board, unless non-farm comes in really low or the unemployment rate comes in really high. But we are expecting a stronger dollar. So how will that play out? We might see it hitting these lows. Remember, this is where we started reversing from yesterday. So if I come to a lower chart, I can see that we have a supply zone over here. So like that. So this might be temporary, dependent on the data we get from also the UK and from next week. Speaking of which, I think we also need to review next week's key data points for the markets. But yeah, if that doesn't happen, then the longer time frame. So those are the key levels to watch out for. 1.26940 around there. That's the key support area. And if we zoom back a bit, you can see that there's another level around this point. Yeah, that's where the market has been failing to go higher for some time. Because right now, what usually happens is a lot of retracements before any major news item is released. So momentum to either side, as you can see, the market is even sideways. Momentum to either side is going to be limited. If we have a push higher, chances are it might come back down until the market is clear with where we are going. So while I'm answering the question on Australia, I think we need to review our expectations for next week. Okay. So let's just go to next week. Let's zoom this out. Okay. So I think the GU question is also important because on Sunday we have Bailey speaking, so you might get some sense of direction with regards to the pound. So if you're planning on holding a trade, I don't think it will be a good idea considering there's major news on Sunday that might affect GU. So that's one thing to watch out for. Of course, they're going to be commenting on how the inflation situation is. There's a lot of talk around stagflation, which is a situation where the country doesn't seem to be growing, yet we have high inflation. It's a very sticky situation for a lot of central banks to be in. So that's something you need to be cautious about. And then you're going to get even more news from Bailey later on Monday, early part of Monday. So I think for GU, it's going to be clear. After today's announcements, it's going to be clear on Monday. So you're set up for next week. We'll probably review it on Friday, but just be cautious about that. And then we have, so next week you have a number of statements. We have from New Zealand, from Australia, and from Canada. Yeah. We've already talked about Canadian expectations that we might have maybe one hike. That's why we've had that downtrend. However, if those expectations change because of today's news, it's something that's going to really push the markets because, again, the decision is next week. So that's something to watch out for. We have inflation. I think this one should be slowly coming down. And then we have this, yeah, which is Australian dollar. So let's jump onto AUD USD. Let's see what's there. So let me just open this. So you can keep the question. I think this is the last chart we're looking at. Then we call it a session. Okay. Okay. So It's just that. So when you're doing your analysis, remember, I think we've covered this many times. Always make sure to do top-down analysis, and that gives you a clearer sense of where the big picture is. And then from there, you can break it down to lower time frames. So we've had this level over here as a support level. Remember, this was PCE yesterday. We had this sharp move downwards. We might see if it has any imbalances here. So we might see us attempting to come back to these levels up here. Remember, balance imbalance. But then we also have minor areas of support here. So see how this one has failed to break higher at this point. So those are the key levels for AUD USD. However, remember, again, if you're doing a fundamental play, the market usually is very quiet, especially if it's major news, until 3 when the news announcements comes out. So in the event we do see stronger figures from employment and unemployment that favors the dollar, then should be looking to go beyond these lows, because remember, we failed to break this point. So if I go back to higher time frame, our new target potentially will be this region over here. Yeah, so remember, you can pause this video and just go through this on your own slowly. This is where we had this area of supply. So you can see here the markets shot up like that, left an imbalance, came back, filled that area, just a minute, like that, and then we had our trend continuing like that. So I'd expect this to be a key area as a target if we see some downwards momentum in terms of AUD USD. However, it's also might be, yeah, I think that's a good level, because by the time it's Wednesday, it's possible for us to get here. If we see some upside, or if this turns out to be a double bottom, then obviously the neckline will be your target, which is here. Remember what a double bottom is? It's something like this. So you'll have this coming down, and then us going up like that, and then that. So if this becomes that means if you get weak data, which, I mean, the upside to the downside to dollar is very limited, so I wouldn't expect it to get this high. But if it does, then the neckline should be your target, in which case this is where we started selling off. So this is a good area as a supply area. Okay, I think that covers AUD USD. Can't really read this comment because on my phone. Let me check it from here. Any other question? Let me see. Okay. Yeah, so yes, DXY is a good pair to look at. It's a good index to look at, rather, when you're trying to gauge where the dollar is, because it combines other indices. But most of the time, they usually just find it's an inverse of Euro USD. So you can look at either. It's going to give you a good picture for that. Okay, having said that, thank you for joining. It was great having you. Today was a very interesting session. I'll also be looking to see what types of setups I can personally find on gold. That's where I'd want to see maybe some strength on this falling wedge over here. All right, thanks for joining. See you in the next session. I leave these charts like this so that next Friday we see how everything played out. So I'll just save everything we've done here, then we can review next Friday. So remember to be following the sessions and have a fantastic trading day.